Hello everyone and welcome back to the second episode of SUD Life Talks. I'm your host Chaudhuri Ghosh. In the previous episode, we discussed the art of longevity and finding your ikigai to live a longer, more purposeful life. In this episode, however, we tackle a different yet equally important topic. Living a long life to its fullest is everyone's goal. But what about the unfortunate instance that take you for a surprise? No one has control over it. Life is full of uncertainties. A serious accident or a critical illness or a hospitalization could affect the mental peace and financial stability of your loved ones. That makes planning your long future one of the most important things that you can do. In this episode of SUD Life Talks, let's talk about the necessity of a term plan and how you can safeguard your family's future even when you are not around. Who better than an expert on the subject to discuss this with? I'm pleased to introduce Pradeep Kumar Anand, appointed actuary of Star Union Dai-ichi Life Insurance. Welcome on the show, Pradeep.
Everyone.
Alright, so before we get started, I think it would be good for all our viewers if you could explain what exactly a term plan is.
Okay. So first of all, let me thank you for having me on the show. And now coming to the term product. It's the simplest life insurance product as we understand. This product basically provides the financial protection to our dependents or the family members of the person who has bought this policy. And this is for a specified time period only. Let's say, for example, I see that I need 1 crore rupees for next 20 years when I'm not there because of my death. My family will require 1 crore rupees in next 20 years. So what I can do is I can buy a term product for sum assured of 1 crore and for a period of 20 years. So in case I die, let's say tomorrow, my family will get 1 crore, which will fulfill all their requirements. When I die after 20 years, before end of the policy term, the family will get the required money. So this way, it helps the family members to fulfill all the financial goals which the family members have set for themselves. That's how this product works. And that's how this becomes very essential for all bread earners, all the family members to have this product with them.
Alright, so people who are the bread earners or the sole bread earners of their family, to make sure that their family's dreams are protected, they need to take something called a term insurance. So, on that context, I would like to ask you, how does one know and how does one calculate how much term insurance does he need? Is there a formula, or is there, or does it depend on on the ability to pay premiums? So what exactly is the way a person can calculate his term insurance requirement?
Thank you for this. See, there are various methods. If you look at financial literature, they'll talk about something called human life value, they'll talk about something called income replacement method, expense replacement methods, or certain thumb rules. See, thumb rules are quite generic. You can't apply it to each and every case. In some cases it may work, in some cases it may not work. So best thing which I suggest and which I do for myself is, calculate what is my financial need. Let's say some example, we can take certain examples. That what all needs we have as a family, as a householder. See, we have, let's see, when the key person is not there, I am not there, so my family will require money for all the future expenses. For my parents' requirements, for a spouse requirement, for kids' expenses. So there is a financial household expenses for entire future. That's one item. Second is that there could be certain loan liabilities which you need to pay. Let's say I bought a home loan. There's outstanding amount. So in case I am not there, the home loan must be paid. Otherwise, they can't hold the possession of the home. So I need to add these two items. One is the all future financial expenses and the loan liabilities. Third item is there could be further specific goals of the family. Could be a specific education to children, higher education, or marriage, or anything else one family aspires for. So all the current cost of those needs to be added here. then we may have certain assets, my accumulated wealth as of now. So you add all the future expenses, loan liability, and other financial goals, and reduce that by the assets which are holding as of now. We come to a number which would be a basic term assurance we require. But this calculation is not one-time calculation. As we see, as let's say I started my career. So initially, my liability is only towards parents because they have taken care of myself. So once I start earning, it's my financial responsibility to take care of them. So I need certain insurance. As I go forward, I will get married. So my requirement goes up. I may have kids, 1 kid or 2 kids. So as we progress in life, depending on individual circumstances, the requirement of term cover goes up. And so we need to keep on buying based on what we need. That's the progression we have to follow.
Alright, so there are two things that come out of it. One is that we need to do a detailed financial needs analysis ourselves to understand what are our liabilities, overall liabilities, and what are our future goals for ourselves. And this is not just a one-time activity, but it is something that each of us needs to do from time to time as we progress in our lives, as we have more and more responsibilities added to us. Thank you so much for this. That brings me to another question. So in your experience, should one buy a unit-linked policy, invest in saving instruments, or buy a term plan? So if one had to, what options should a person opt for?
Okay, so see, all these products have different objectives. If we compare term products, other insurance product, or other saving instrument in the market, the objective differs. Within insurance itself, as we discussed, the prime objective of the term plan is to provide financial protection to the family in case of death. However, this takes care of our requirement only in case of death. Let's understand this. My requirement of 1 crore in next 30 years. If I die, my family will get 1 crore rupees. But what if I survive? I need to accumulate the wealth for that. I need enough money for all my goals in future. So, as the needs are too different, one is to protect in case the person dies, other is when the person survives. So, we need both these products simultaneously. Be it ULIP or traditional insurance product or any other saving instrument or term insurance. Because they differ in the objective. Yes. Priority, if you ask me, we should start with term insurance. Because that's the basic requirement, we don't have enough money for the future. But as we progress in life, we keep on evaluating our needs and building the wealth and money for specific goals. All insurance products pertain to certain goals in life. Maybe, let's say I need 20 lakh rupees after 10 years for my children's education. So I need to buy a specific product which will fulfill the requirement. So each goal, there has to be a specific requirement and we need to plan accordingly. So at nutshell, we can say that we definitely need term insurance, but along with term insurance, we need other products also.
Right. So what you're saying is it's not either or.
Yeah.
It is a combination of different products depending on the goal that we have in mind, the financial goal that we are trying to achieve.
Yes.
Beginning with term plan.
Beginning with term plan. That will take care of. Let's say retirement. Now, retirement may not be on top of priority when you start careers in 20s, 30s. But the moment we think of retirement, we have to think how to accumulate money. So there are products which serves the purpose of accumulating money for that. There are products, once somebody retires, the need differs. Then what we're looking for is certain income, regular income, monthly income. For this, there is different product. So as requirement evolves with time, we have to find what is a suitable product for us.
Right.
Be it on saving side, be it on the term side.
And since we spoke about age, what would you say is the right age for buying a term insurance product?
See, as we understand, the premium depends on age, health conditions, or smoking habits. Considering that, it's quite obvious that once we age, when we progress, the premium will go up. It means the early we buy, better it is. We have to pay lower premium. And also, the moment we acquire financial responsibilities, it is good to start with. Anyway, we are not going to end with one product. As you understood that once we progress in our life, the needs keep on evolving, and probably we have to buy more than one term product, more than one saving products. I myself 3 products. So as we progress, so it's better to buy as early as start at least buy the first policy when you start your career, and then keep on thinking. Apart from the term, look at it has various variants also in term. Death is a one risk, but there are other risks also, like the critical illness is there. No, so in that case, you can also buy a rider or a product which give you options of covering the critical illnesses. So that takes care of somebody suffer from critical illnesses. It will provide certain amounts. Probably that will compensate for loss of income during that period, or medical expenses it can take care of. Apart from that, you can see in term products like there are products which says that if you don't die, survive the entire period, they will return the premium. So we usually call return on premium product. So depending on need, you can choose, but it's good to start early. That's the key.
Right. So starting early with the term plan, and with time, of course, term plan products have also got variations now. One is the return of premium rider and the critical illness rider that will cover not only for an accident but also a lump sum for hospitalization or a lump sum for other critical illnesses actually. So this is like a combination of
So it need not be rider. Some products offer these benefits as options. Some products offer as a rider. There are various products in the market. One can choose from that. But the most important thing is to buy it. Yeah. So let's say somebody is late. Doesn't mean you should not go for that. The moment person gets aware of the requirement, you should go for that and buy it.
The final question: how can I keep my term premium low?
It's simple, not that difficult. The idea is that, as we understood, that if you buy at a young age, you get low, you will feel low. So one thing you can do. But doesn't mean that you cross the young ages, so you can't keep the premium low. You can. Simple rule is that you keep yourself healthy, because insurance company will charge lower for healthy life and higher premium for unhealthy life. So if you eat healthy, you sleep for required duration, you exercise daily, so high probability that your premium would be low. Don't smoke simply. If you smoke, there is a premium. You have to pay for that. There is a cost to that. If you don't smoke, your premium reduces. So it's keeping a good good lifestyle helps you to keep your financial outgoings also less. It's quite a win-win thing you can do. That's easy.
Right. Thank you, Pradeep. I think you have explained it quite simply to all our viewers, and I'm sure that people are not just planning for the future, but they also need to plan for their today. And they need to take action today so that they can protect
That's
their
the most
future.
important thing. Thank you.
Yeah.
Thank you. Nice being here. Yeah.
Thank you. So whether you are single, married, or a retired parent, always ensure that your family is financially stable in case of any unfortunate event, so that they can live a secure and stress-free life. Thank you all for tuning into the episode of SUD Life Talks. If you haven't already watched the first episode where we discuss the Japanese secret to a long and healthy life, do click on the link below. As always, stay secure and we'll see you soon in the next episode. Thank you.